Hey, everybody, we're just going to give a couple more minutes for folks to keep signing on. A couple more seconds. All right. Let me just go ahead and get started. It's so nice to see everybody here. My name is Ben Allen, State Senator. As some of you know, we've been putting together webinars and virtual workshops on a range of issues through the course of the session, from student mental health to wildfire safety. And today I'm just so excited to partner with a wonderful, wonderful community organization that many of you know so well, Bet Tzedek, which has been helping people in our region for many, many years in all sorts of different forms. And today we're going to talk about tax preparedness. And we all know that the tax season is one of these things that is a necessary evil, I suppose. And of course, we're all getting ready to prepare our 2022 taxes for the filing season. April 18th is tax day, but it's of course never too early to start working on your tax returns. So before I introduce our guest today, let me just tell you briefly about some things that are going on with our new 24th district, which I now was elected to represent in the November elections. We have redistricting every 10 years after every census, and it can be a pretty confusing process. So I just want to make sure folks know the new district that I represent forms the core of the old district, which is the West Side, Hollywood, the coastal South Bay. But the district boundaries have shifted a little bit so as to now include the Santa Monica Mountain communities of Malibu, Agoura Hills, Calabasas, Hidden Hills, Westlake Village, a big portion of Gardena, and now the entire city of Torrance. The portions of the district that I'm at least sharing for at least a couple of years include Catalina Island, LAX area, Westchester, some portions of southern San Fernando Valley. Those areas are going to be in other districts after the next go round of elections, including also some areas of mid-city, kind of mid-Wilshire neighborhood. But our doors remain open for everybody. Certainly, we have strong relationships in all those districts that all those areas where we used to represent, and we want to continue to help those communities and also build strong relationships with the other senators that will be representing those areas. I'm continuing to serve on the Senate Environmental Quality Committee as chair. Also now members of Elections and Constitutional Amendments, Judiciary, Natural Resources and Water and Transportation. One little update on the budget I think I should mention. Of course, we've got a massive a surplus last year. Now we have a deficit, certainly much less of a deficit than we had a surplus last year. But thankfully, there was a lot of cash reserves set aside in last year's budget. Not enough from my perspective. But that's really going to allow us a little bit more flexibility that will help us as we try to delay some funding into future budgets. But please be in touch with our office as well if you have ideas about issues relating to the budget. The budget process is beginning, with a lot of engagement from community members and senators, of course. So if you have opinions and thoughts about the state budget, please do engage with our office. With all that being said, let's talk about the main topic that brings us all here today: tax preparedness. So tax season, can always be a bit of a stressful and confusing time. Certainly is for me. But I'm just hoping that this webinar will provide some clarity and some calm, and provide both maybe some tips and some thoughts about as folks are preparing for their taxes. Let me remind everybody about one particular program that exists for a particular group of people in the population. This is the Earned Income Tax Credit. It's a program for working people that are getting incomes. So you're working, but your income is less than $30,000. And so the program can reduce the amount that you owe or provide a cash refund. So if you're somebody who is earning less than $30,000 a year, you have to be at least 18 years of age or have a qualifying child. You have to have a social security number. You have to have an income or an income taxpayer number. But you may be eligible for the earned income tax credit. So if that's something that you want to check out, Jake's going to put a posting in the chat so that people can learn a little bit more about eligibility for the earned income tax credit. But it's a very important offering for people who are working but are earning less than $30,000 a year. This is something from the Franchise Tax Board that Jake's going to post. I also just want to share a few additional resources to help with your taxes before our guest gets on to present. You can use CalFile, which is a Franchise Tax Board service that allows individuals to e-file their state tax returns. Jake's going to put that in the chat as well, so people can see the link there. But let me just say, you do not have to go and spend a lot of money on a private sector tax filer service, or at the very least, get a better understanding of some of the options that are out there that are already provided by the tax board before you do that, if that's an expense that you're concerned about. So check out CalFile, for example, that allows you to e-file your state tax returns on your own. You can also use Free File, which is with the IRS. That allows individuals to file online directly through virtual forms or through a partner website, and we're going to put that link in the chat as well. If you have any other questions about any of these resources, there's another website, caleitcforme.org, which we'll also put in the chat. And without further ado, let me introduce our guest speaker today, who's a great expert, and we're just so really grateful to have Crystal join us. So Crystal Premanchandra is the director of Bet Tzedek's Low Income Tax Initiative. And for those of you who are not familiar, Bet Tzedek's a wonderful nonprofit that basically works with, provides legal resources to residents in need across our region. I'm just so excited to have Crystal with us today to talk about such an important topic that affects us all. So Crystal's going to present a basic overview and some tips on preparing your tax filings for this next tax season, including some questions. She's going to take some questions that some of you have already submitted to my team. And she's also going to mention some major changes to look out for this year. And then finally, she'll share some filing resources for you and share her contact information in case you have some more specific questions that require a one-on-one consultation. Let me just say, if you have questions that are very, very particular to your situation, we did get a number of questions in that were just so particular, it just didn't make sense for us to have her answer them in the context of a webinar that, we have hundreds of people joining right now. Many hundreds more are going to be listening in the future. So we're happy to try to get those specific questions answered in a better context. But if there are questions that you think would benefit other people besides yourself, please do post them in the chat. We will try our best to field as many as we possibly can. And with that, let's turn it over to Crystal for her presentation.
Thank you so much for the introduction. I'll give a second here for the presentation to start. I have some slides. But good afternoon, everyone. So yes, as the Senator mentioned, I will be discussing topics today relating to the 2023 filing season for tax year 2022. My contact info is on the second page of the slide. My email is kpremachandra@bettzedek.org. And my phone number should be on there as well. Well, it's not, but it's 323-549-5826. You can reach me directly if you have specific questions, or if I mentioned something during the presentation that you want some clarity on, or maybe you are looking for assistance with your tax issues. Okay, and next slide, please. So an overview of today's presentation, we will be discussing preparing for the filing season, major changes to look out for that are different from the 2021 tax year, some tax-free tax preparation services, and there should be a PDF that'll go out to everyone with clickable links to all of the resources and all of the information that I'm discussing today. So we can advance the slide, please. Next. Okay, so preparing for the filing season, like the Senator mentioned earlier, filing your taxes can be overwhelming, but it really doesn't have to be, as long as you keep certain things in mind. So some important dates. The filing season already started. It kicked off on January 23rd, 2023. And as you can see on the top corner, I have put the date April 18th or May 18th in brackets. So in general, the filing deadline this year is Tuesday, April 18th, 2023. However, the IRS in California have extended the deadline for filing to Monday, May 15th, 2023. And the reason for that extension is because Los Angeles County, among several other counties, are now eligible for the extended deadline because of the storm disaster. So you don't have to go and apply or anything. The IRS automatically provides the filing and penalty relief to any taxpayer with an IRS address of record located in the disaster area. And I have
provided. Disaster area includes the entire county?
Yes.
Okay.
Yes. So, and I have provided that resource at the end of the presentation or in the attached Adobe that'll the PDF that will be going out to everyone. So you can read that, the news segment right there. So yeah, but at the same time, you know, it's advised to definitely consult with your tax preparer to see. In California, there's also, aside from being eligible for this extended deadline, there's a disaster loss deduction that you could potentially take. So if you want to know if you're eligible for the state of California, you have to definitely get some advice from your tax preparer, because it's definitely on an individual basis. If you need more time to file beyond the May 15th deadline, it's advised that you request a filing extension. You can request a filing extension by either utilizing the free file resource or by filing Form 4868. This will give you until October 15th, 2023 to file your return. So if you owe taxes and you will be requesting an extension to file the return, you still need to pay the taxes you owe by May 15, 2023. If you don't, then you will be assessed a failure to pay penalty. But you will avoid the failure to file penalty by requesting that extension to October 15th. So I know there's a lot of dates, but those are the general ones to keep in mind. If you're expecting a refund, you don't have to request a filing extension. You just have to keep in mind that you have 3 years from the filing deadline to file a return in order to claim your refund at the federal level. At the state level, you have 4 years. A lot of taxpayers forget about this. They say, well, you know, I didn't owe any taxes, so I decided to file my return just to see if I could get my refund still, and they do it 4 or 5 years later when the statute of limitations has already run. So keep in mind, for the IRS, it's 3 years, and for the state, it's 4 years. Okay. So at the federal level, if you are going to owe, you do not request an extension, then you will be assessed the failure to file penalty. And just so that you can be aware, it's 5% of the unpaid taxes for each month that the return is late, and it caps off at 25%. The failure to pay penalty is 0.5%. If you owe both, so the failure to file and failure to pay, it would be 4.5% failure to file and 0.5% failure to pay. So I always tell my clients and people who I'm speaking with that it's always a great idea to request a filing extension if you're going to owe, because that is the bigger of the two penalties. And if after 5 months you have not paid the tax balance, the failure to file penalty will max out, but the failure to pay penalty continues until the tax is paid, up to 25%. The interest rate is low. So I have a lot of taxpayers who come to me and say, well, I'm going to owe taxes, but I don't want to file because, you know, the interest rate and the penalties. The interest rate is actually 0.5%. So it's better to get it filed. It's okay if you owe. You can always reach out to a low-income taxpayer clinic like ours at Bet Tzedek. If you qualify, we can definitely help you out and help you get on a resolution plan. And there are also other clinics in the greater Los Angeles area that would be happy to help. So I did provide a chart and to see, do you even have a filing obligation? But just briefly, the next square, as you can see, it says, do I have a filing obligation? So for 2022, if you are single, under the age of 65, you have to file a return if your gross income was at least $12,950. If you were head of household and under 65, that amount is $19,400. And if you were married filing joint under 65, the amount is $25,900. Keep in mind, if you are married filing separate, you can be any age. If you made above $5, you have to file a return. There are a lot of people that get that confused. They're, well, I didn't make anything. I made $200 this year by selling these crafts online. Well, if you're married filing separate and you're doing that, then you have to file a return. The IRS needs to see it. So, and lastly, if you're self-employed, this is also another misconception. If you're self-employed, you're required to file an annual return and pay estimated tax payments if your net earnings are $400 or more. So a lot of taxpayers, say, well, I don't have to file. I don't have a filing requirement. I only made $10,000 this year. Well, if you're self-employed, yes, you do, because you made more than 400. So keep that in mind, keep good records. There's also earned income and unearned income. It's, I posted that also in the resources, but just to give you an idea, if you earn salaries, wages, tips in the form of check, cash, Venmo, Zelle, professional fees, or any other amounts received as pay for actually work performed, that's considered earned income and reportable. Okay, so next is, figure out if you have to file. We have I posted an interactive tool in the resources that lets you go through the steps and lets you know, do you have a filing obligation? But even if you don't have to file, it might still be a good idea to file if you have federal income tax withheld from your pay in 2022, or if you made any estimated tax payments, because you might qualify for tax credits like the earned income tax credit, the child tax credit, the health coverage credit, child and dependent care credit. There are several credits that you could take advantage of by filing a return, even if you don't have a filing obligation. It won't hurt you. So again, consult with your tax preparer. It's based on your specific situation, and you can also utilize the interactive tax assistant. So next, filing status. So there are different filing statuses. The most common ones are single, head of household, married filing joint, and married filing separate. I'm going to briefly cover the head of household filing status because it is the status that is most misused. This status can claim approximately 50% larger standard deduction than a single filer. So in 2022, if you're filing head of household, you can claim a standard deduction against your taxes of $19,400 versus $12,950 if you were a single filer. So that is why it's more advantageous to use the head of household filing status if you qualify. The status also is able to use a wider tax bracket, so it allows more of your taxable income to fall into a lower tax bracket. In order to claim this, you need to be legally single. You have to pay more than half of the household expenses, and you have to have either a qualified dependent living with you for at least half the year, or a parent for whom you pay more than half of their living arrangements. Again, if you're not sure if you qualify for this filing status, definitely consult with a tax preparer or go through the virtual assistant, because head of household filing statuses and the earned income tax credit and child tax credit are the most audited credits and filing statuses of all of the returns. Like, that is the most audited issue. So if you want to avoid that, make sure you have all of your proof and that you're filing in the right status. Okay. So another thing to ensure a smooth tax preparation season is to gather your documents. So W-2s from employers, 1099s. If you received unemployment from the federal government, you will receive a 1099-G in the mail. So take that to your tax preparer. If you're a gig economy worker, independent contractor, look out for a 1099 miscellaneous or a 1099-K. And then there's also, if you received interest within the year, you'll receive a 1099 INT. Also, make sure you have a record if you have any digital assets to keep a record of that. The 1095-A is also another common form that some people will kind of toss out because they're just like, oh, it just proves that I had health insurance for the year. Well, you're going to need that, and your tax preparer is also going to need that. So remember, most income is taxable. So just gather all of your documents, all of your tax records that you receive in the mail. If you did a project or a job and you were expecting a 1099 miscellaneous or something like that, and you don't receive it, you might it might benefit you to reach out to the person you did the work for. And the only reason I'm mentioning this is because any form, so if you're an independent contractor and you did work for someone, you performed services and you were expecting to receive the 1099, if you don't receive it, you forget about it, and they did actually issue one to the IRS, the IRS is going to see like, oh, this person actually received $5,000 from this company or this job, and they didn't report it on their return. So anything that might be issued in a 1099, the IRS has a record of. And if it's missing from your return, they're going to know. And that's what's going to trigger an audit. So just, try remembering the places that you worked, and hopefully you have all of your tax documents. If not, it might be worthwhile to reach out to whoever you did the work for the corrected tax document. Okay. And lastly, on this slide, expectations, refunds, or owing taxes. If you are expecting a refund, you can check the status of your federal refund with the Where is My Refund tool. And I have linked that as well. For the IRS, if you e-file, you should receive your refund in less than 21 calendar days. If you paper file, it could take, at this point in time, more than 6 months. Which is actually a short amount of time compared to the millions of returns that were not processed until maybe a few months ago since the pandemic. So we're talking about 2019 returns, 2020 returns, business returns. All of those returns took a long, long time to process because people paper filed them. I personally had multiple clients who didn't have their 2019 or 2020 returns processed until, maybe a few months ago. So highly advised. The IRS did hire a lot more people for this filing season, so it is expected to go more smoothly, but they still haven't fully caught up. So it's always, always, always highly advisable to e-file it, and also link a bank account so you can receive direct deposit. Okay. And just keep in mind, the refunds are going to look a little differently this year. And in the next few slides, I'll explain why. So, the consensus amongst, the community is that taxpayers are, targeted to receive lower refunds this year because of the changes made to the refundable credits, and for the mere fact that the stimulus payments are no longer available. Okay, so coming back to owing taxes, if you are going to owe taxes, do not let this deter you from filing the return. If you file the return by the deadline or the extension, you will only be assessed the failure to pay penalty, which is smaller and it accrues low interest. And then in the meantime, you can reach out to a low income tax clinic. You can reach out to Bet Tzedek, and if we're able to assist you, we will help you in resolving your matter. But definitely don't let it deter you from filing your taxes. Okay, next slide. We can advance one more slide. Okay. Now we're going to talk about the major changes and things to consider. So the standard deduction for 2022 did increase by $800 for married couples filing jointly from 2021. So married filing jointly, you can expect to take a standard deduction of $25,900. For single taxpayers, the standard deduction this year is $12,950. And for taxpayers using head of household filing status, the standard deduction is $19,400. So it's up $600 from 2021. Okay, and the next box, tax bracket shifts. So for 2022, tax brackets have gone up, but the tax rates have stayed the same. For individual tax brackets and tax rates, you'll just have to look at the chart that I've provided in the resources. But what this basically means is that more of your money is going to be taxed at a lower rate. So if your income and tax withholding stayed about the same, you can generally expect to see an increased tax refund or a reduction in the amount you owe. Okay, so now I'm going to discuss the child tax credit first. Then I'm going to hit on the earned income tax credit, and then the child and dependent care credit. This is going to explain the majority of changes. So first, the child tax credit. It's going to be smaller. The credit is going to be $2,000 per dependent under the age of 17 for 2022. In 2021, the credit was $3,600 for children under the age of 6 and $3,000 for children under the age of 18. So additionally, taxpayers will need to have a minimum of $2,500 of earned income to qualify for the refundable portion of the credit. In 2021, you didn't even need to meet a minimum income requirement. So the credit in 2022 will no longer be fully refundable. If the child tax credit exceeds the taxes you actually owe, you can only get $1,500 of the credit refunded back to you. And in 2021, it was the entire amount. So to summarize that, the credit is now $2,000. Now you have to be under the age of 17 at the end of 2022. You also have to have a minimum earning of $2,500 to claim the credit. And you can only expect to receive a portion of that credit refunded back to you if it exceeds the taxes you owe. I have provided links to see if you qualify for the child tax credit, but those are pretty much the qualifications. Next, the earned income tax credit. So this was also a credit that was temporarily expanded in 2021 to help moderate and low income workers without children get a bigger tax break. This relief has also ended. So in 2022, single filers with no children, often in the news, they're referred to as childless workers. who earn less than 16,480 can get a maximum credit of $560. In 2021, that amount was 1,502, and it was fully refundable. So it's a bummer, and it was a very great credit for those working, receiving less than 16,480 in income. So that credit has been reduced. The amounts for those that are filing with one qualifying child, two qualifying children, or three or more, they've actually increased a little bit. So if you have one qualifying child, you can receive up to $3,733. If you have two qualifying children, the amount is $6,164. And if you have three or more children, it's $6,935. To qualify for this credit, the federal earned income tax credit, you have to have worked and earned income under $59,187. You have to have a qualified dependent. Investment income has to be below $2,300. You have to have a valid social security number and be a U.S. citizen or resident alien the entire year. And you have to also meet certain rules if you are separated from your spouse and not filing a joint tax return. In California, you do not have to have the Social Security to claim the California earned income tax credit. You can have an ITIN number, which is great. So pre-2021, so pre-pandemic, before the American Rescue Plan, if you were married filing separate, you could not claim the earned income tax credit. So if you were the custodial parent and you were married filing separate, you could not claim it on your return. So now you can claim the earned income tax credit if you're married and not filing a joint return, and you had a qualifying child who lived with you for more than half of 22. And also the following apply. You have to have lived apart from your spouse for the last 6 months of 2022, or you're legally separated according to your state law in a written separation agreement. And if you're, again, unsure about your filing status, use the Earned Income Tax Credit Qualification Assistant or the Interactive Tax Assistant. Okay, second to last, Child and Dependent Care Credit. So this credit expansion also ended, and it's one of the biggest ones to end, unfortunately, because this credit basically, helps parents who pay out of pocket for childcare expenses. It enables them to work to claim the credit that is equal to 20 to 35% of the total expenses. Taxpayers with higher incomes can claim the smaller credit. So for qualifying taxpayers earning $125,000 in 2021, they were receiving up to $4,000 for one qualifying person and $8,000 for two or more qualifying persons. And it was also refundable. For 2022, you can only have earned $15,000 or less to qualify for the maximum credit, and the maximum credit is $1,050 for one qualifying person and $2,100 for two or more qualifying persons, and it's no longer refundable, unfortunately. So a qualifying person in for this particular credit is a dependent under the age of 13, or a spouse or dependent of any age who is incapable of self-care and who lives with you for more than half of the year. Okay, and then lastly on this slide, the charitable deduction. In 2021, there was a lot of news articles and announcements that said, hey, you can take $300 off of your tax return if you donated to a charity and you took the standard deduction. And that allowed, taxpayers to reduce their gross income by up to $300 or $600 if you were married filing joint. Well, for 2022, it went pre-pandemic, before the American Rescue Plan, Now you have to choose between taking the standard deduction, or if you donated to charities and you want to take those deductions, you have to itemize all of them. So you can't do standard deduction plus a certain amount that you donate to charities. You have to itemize all of your deductions in order to write off those charitable donations. So this is definitely one of those deductions that you want to consult with your tax preparer and see if it's worth it for you to even do that versus taking the standard deduction, which has increased quite a bit this year. And then not on the slide, but just a small note to gig workers. So if you drive for Uber or delivery, and you're receiving, the IRS is implementing new rules. These rules were going to go into effect for this filing season, but they are, because there was a lot of, outpour and commotion that this is not unfair. This is not fair to spring this on gig economy workers that, a lot of people don't understand. Oh, I sold some clothes to some people. I have an online, kind of garage sale going on, and I just get paid from Venmo. Well, now that's taxable. You're going to be receiving 1099Ks from Venmo, PayPal, and that same 1099K is going to be reported to the IRS. So these rules are going to go into effect for the tax year 2023. Bet Tzedek is planning on preparing educational materials and presentation on those changes and how to prepare for 2024 filing season for tax year 2023. So what I would do for now is just get your documents in order, know how much you actually owe, and keep really good records. Previously, the threshold for the 1099K reporting was 200 transactions. Let's just take Venmo, for example. You would have had to have done 200 transactions with a total value of more than $20,000. In the past, earnings beneath that amount might have flown right by the IRS's radar. The new reporting protocol directs third-party payment networks like PayPal and Venmo and Cash App to send the IRS a 1099K for any user that receives more than $600 in gross payments, and any number of transactions over the course of the year. So it could be one transaction in the amount of $700. And that is going to require Venmo or Cash App, whichever one you're using, whichever platform, to send a 1099K to the IRS. And they're going to send one to you. And if you don't include it, we are anticipating a lot of audits. So we're definitely going to try and get some educational material out there so that, taxpayers can prepare for next year. Okay, next slide, please. Okay, this slide is really brief. These are the different names of tax preparation services. Like the senator mentioned at the beginning of the presentation, you don't have to pay a lot of money to a tax preparer. You can use the IRS Free File. You can use Free Tax USA. There's also the Volunteer Income Assistance Center, VITA. And there are plenty of VITAs in the Southern California area. I linked a resource on the PDF attachment that'll allow you to search for the nearest VITA near you, so that you can make an appointment. And then there's also tax counseling for the elderly. I've also linked that resource, and there's a tax aid site locator. So there's a lot, and we honestly, during the pandemic, a lot of education was given on this. There are a lot of free filing resources and organizations out there that are able to help you file your return if you qualify for their services. And lastly, just a few tips to reiterate what I've basically presented on. If you e-file, great. Try to e-file as much as possible. If you have been a victim of identity theft in the past, you can get an ID protection pin from the IRS. You apply for it. If you need help, reach out to us. We can help you. And you can use that pin to e-file your return. Gather all of your records. You'd be surprised at the amount of people that didn't think unemployment tax was taxable, and they threw out their 1099-Gs, and a lot of people were audited, and penalties were assessed and interest was assessed. So just get everything, even if you don't think that it's going to matter, just get it together and be ready for your tax appointment. And then if you don't have to file a return, but you might benefit from some of the credits I mentioned during this presentation, file a return. It could put money in your pocket. You really don't have anything to lose, especially if you're utilizing one of the free tax prep services. And then, yeah, just remember the dates. You have until, if you were affected by the storm, you have until May 15th, 2022 to file and pay your return. Or if you request an extension, October 15th. And that is it.
Thank you, Crystal. So you don't, do you have to attest that you were impacted by the storm to be able to file by May 15th, or is everybody in LA County automatically, the new deadline is May 15th?
So yeah, that's what we thought at first, but it says that if you have an address in LA County, they are going to consider that as you were affected by the storm. So everyone in LA County, Contra Costa, there's the news article is linked for everyone to review. But yeah, that is the announcement. It was announced like a week ago or so.
Provides people a lot more time. So
yeah,
which can only be helpful. All right. We've got a few questions. First of all, thank you for the presentation. Really appreciate your time. And thanks, obviously, some of the pre-submitted questions you already answered through the course of your presentation. Ray Joseph from Manhattan Beach was asking about writing off health insurance. This is someone, he's self-employed. And can you talk a little bit about that?
Writing off health insurance, I'm not sure that I can answer that question. I know that there is a deduction that you can take, but definitely that's something that should be asked of the tax preparer or CPA. Yeah, I don't feel it depends on each person, but I know that some people can write off their health insurance.
And it usually, so it sort of depends on how it interplays with your salary and other factors.
Yeah, like if you have a business, if it's a part of your, if you're self-employed, that's part of your business expenses that you can write off.
Yeah, I always thought it was.
Yeah, Schedule C. I saw it pop up. Yeah, on your Schedule C.
Okay. Yeah, good. Okay, that's right. So Schedule C, right. Okay. Some other questions. Joseph asked, I was wondering if there would be any information provided during this webinar on receiving assistance with back taxes or financial hardship assistance due to taxes.
Yes, definitely. So what Bet Tzedek does actually, if you reach out to us, we have our website, it's bettzedek.org. You can click on a link that just says, get some help. And you can fill out an online intake form, and it just requires basic information, your name, your phone number, or it's dropped there in the chat, or you can call the intake line, but online will be way faster. So basically you just submit that basic information, and then either myself or someone on our team will reach out to you, do an intake, and get some information from you, and then try to help you resolve your issue. We help with hardships, innocent spouse, offers in compromise, tax court, the gamut of tax resolution.
Yeah, okay. Sally was asking about the California gas refund and whether it's taxable on the federal level. So that money we all got in those cards, those credit cards.
Right, no, it's not.
Okay. So
or
it's
at the
not
state level. Yeah.
neither taxable at federal nor state. Good. Okay. Donald asked, is your tax return less likely to be audited if you go through the VITA program? VITA, yeah.
I mean, yeah, I would think, right? Because you're meeting with someone, they're all trained, they are volunteers, but they're trained, and there is the person who runs the VITA reviews the return, and they counsel you through your documents. So if you are truthful and you provide accurate records and proof that you are able to take the earned income tax credit, the child tax credit, then there shouldn't be any issues. There are some taxpayers that still get audited. For example, if you're claiming your niece on your return and they are, 1 or something, like I've seen that happen, where it's no fault of the tax preparer, it's just the computer just automates an audit. Sometimes it's the most audited issue, but we also help with that as well. You have to do an audit reconsideration and just provide the documents at that point. So it could happen, but yeah, if you go to someone who's helping you prepare your taxes, less likely to get audited.
Okay. A lot of people were stressed out about some of the Venmo comments.
Yeah.
So when you pay a friend through Venmo, that friend now gets a 1099K. I mean,
No.
yeah. Okay. Right.
So again, we are trying to get education out there. The IRS, I attended a conference actually in December, and they announced this, that, hey, 1099Ks are coming into effect, PayPal, Venmo. So there was uproar, and it was like, well, what about people that are, paying each other or friends? So they are still developing the rules and criteria. I just gave you what the IRS has announced. If it's more than $600 and it can be any transaction, there is like on Zelle, I don't think Zelle will be sending 1099Ks, because when you make the payment, it's through friends and family. So on Venmo as well, if it's friends and family, for something like, oh, hey, you owe me for the electricity bill, or I went shopping and here's the amount you bought me my clothes, here's the $100 for the clothes. Those types of things are not going to be taxed, right?
Right. I would think so.
Yeah, but it's going to get a little messy. So we are definitely want everybody to prepare. I wish I knew more, but that's all I have for right now for that.
Now someone asked about becoming a widow in 2021. Is there a function by which they can still file married jointly for 2022?
The status is the qualified widower.
So what does that mean?
It's just a different, so if you're a widow in 2021, you would be a widow still at the end of 2022. So you wouldn't file a married filing joint in 2021 either. It would be the qualified widower filing status. It's just, I don't have the information in front of me, but it's just a different threshold amount that you made.
So if you lost your spouse, even if you lost your spouse in 2022, there's as long as it happened within calendar year 2022, you should not be filing under any
circumstances. It depends when you lost your spouse in 2022. So some you are able to, yeah, that's right. I'm seeing the text. Yeah, next year is qualified widower.
The next year, okay.
Yeah.
So in the year of death,
it's married filing joint, and then 2 years after that, it's the qualified widower filing status. So, if you lost your spouse in 2021, you are using the qualified widower status in 2022.
Okay.
Right.
We got a question, which I do want to entertain because I know this was going to come up. In fact, we have Jamie here on the call just for this. KJ asks about never having received the gas card from the state. Who may I contact, please? Jamie, you want to jump on and talk shop about gas card questions?
Yeah, of course. I'll put my email in the chat as well. But if you have questions regarding your middle class tax info, tax card, you could go ahead and send me a message and I'll open an inquiry with the Franchise Tax Board. So I'll go ahead and add my email address in the chat right now.
Okay, thank you. And by the way, one thing I should mention, if you did get one of those cards, the Franchise Tax Board is encouraging people to get that money out of the card and into your bank account ASAP, because unfortunately there have been some fraud cases. So that's they've put out an advisory to everybody. So please do, clear that card and get that money into your bank account. Okay, another question. I have a disabled daughter who receives SSDI. SSDI is her only income. She's on Medi-Cal. She lives at home with me. So she received, $25,000 from Social Security in 2022. Does she have to file taxes for 2022? She never has filed in past years. No, I wouldn't think so. Right.
No. Yeah, and anything that's again, my phone line's always open, email too. I answer a lot of questions through email. You can just shoot me a quick email and I'd be happy to answer, because that's pretty specific, and cautioning your taxpayer information is very private. So if you don't want to share that, just send me an email. But yes, no is the answer to that.
Okay. There was a question on here about whether we're going to post this. Yes, we will post it. It'll be available online on our Senate website. So if you miss anything, or you want to go back, or you want to refer this to someone or a friend, it will absolutely be available. It should be posted within a day or two after the webinar is done. There's a question about translation resources. So is there information on the resources provided available in Spanish? I mean, do we, I would think Bet Tzedek has got some good materials.
Yeah, so we are actually working on a flyer. So everything that I basically covered in this presentation, we are anticipating having an educational flyer to be distributed to the public, and we are going to translate it in Spanish, Russian, and several other translations. If you shoot me an email and let me know which language you would like it translated to, we can get that translated. And then we should have it available. I will send it over and it can be dispersed to everybody.
Okay. Someone's saying they got a 1099 for the middle-class tax credit money. Is that, has that been happening? I
haven't heard of that.
I certainly didn't get one of those. But,
I could quickly answer that. If you received a middle class tax refund of $600 or more, you will receive a 1099 miscellaneous.
Oh, okay. And so now, but we are hearing here from Crystal that you don't have to pay federal tax on that.
I know for sure you don't have to pay state tax. I think Crystal's correct about the federal taxes, but just in case, I think you should speak to your tax preparer for
yeah. From what I've read, just to add on that, it's not taxable at the federal level, but still consult with your tax preparer.
Someone asked a question here about a mutual fund where foreign taxes are involved. Gosh, I mean, it's maybe unfair to ask you, but someone who says they earn 40K a year, it usually takes the standard deduction. Any insight into that?
40K a year. Well, so in general, if you are a US citizen and you're receiving income in another country, the US taxes on a worldwide basis. Obviously, you wouldn't be paying tax at the state level because you're a resident of California and the income was earned abroad. There are several treaties in different countries that would allow you to take a foreign tax credit against that income, so you won't have to basically double pay your taxes. Again, that's a very specific question, but in general, there's a foreign tax credit depending on which country you're earning income in. And there's a ton of rules involved with that. So you definitely have to consult with your tax preparer. And
Abraham, as always, is helpfully mentioning the fact that there's a foreign tax credit form 1116, not difficult to handle in most cases. Software will have input on this. Okay, gotcha. All right, I know there was another question that came in. Let's see here, sorry. So Jeanette was asking self-employed business question. Reporting losses mainly due to COVID impact on the restaurant biz. In 2021, there was ability to suppress those losses from your earnings. There was a difference between federal and state allowing this. Can you clarify? Any thoughts on?
I'm not sure to answer that question. I don't know. We do take taxpayers who have their own businesses and file Schedule C and are self-employed, but that did not come across. So I wish I could answer it.
Okay. So there's some folks were asking about eligibility for the middle class tax refund. We've posted in the chat the Franchise Tax Board's estimator, and it basically is you get a kind of a sliding scale based on your salary, and there's a point at which you're no longer eligible. But if you earn below a certain amount, you get more. If you earn above a certain amount, you get less. So you can go put in your own personal information into that website that was posted. Okay, what else here? Let's see. And then we'll probably take one or two more and then close out. And of course, thank you for all the positive comments about Bet Tzedek that some people have been posting, because I share them, and I really appreciate all the work that Bet Tzedek does helping folks. Let's see here. Question about 1099-R rollover from 401k to 403b. Do you want to wait? Do you want to pass that off to a?
Yeah, a little too specific for me.
Okay. All right. Yeah, that makes sense. Okay. Let's there's one other question here. Earnings related. I'm in an affordable housing program in Hollywood, an 80-20 building. I'm worried I will be kicked out if I earn more than 67K in one particular year. Do I need to be worried? So she's okay. Wow. Gosh, that's a good question. Does anyone here know the answer to that? So there's someone who's getting affordable housing in the affordable housing program. What if their salary has now maybe potentially gotten them above the affordable housing eligibility limit? Any insights into that? I know it's not maybe in your bailiwick, but certainly I know there are folks at Bet Tzedek who can help with this.
Yeah, we have a great housing team. So if you were to reach out, that question could definitely get answered. And
Okay.
any other questions you have?
Yeah, but this is just the kind of thing that Bet Tzedek helps with. So Crystal, if maybe someone from your team can just post the contact information that they ought to. There's probably a general line that people ought to call.
Same. So the website that was shared earlier, same process. Just click on the link to get help, and you just put in your information for that particular program. It's the PEP program.
Okay. All right. Listen, we're getting up to yeah. So David's saying they should not be in affordable housing, right? So I guess the point of the question, I guess, David, is that this person is now earning. They've now earned. They probably had a spike in salary, so all of a sudden they're potentially not eligible for affordable housing anymore. So that's I think the premise of the question. Okay, so I think we had an hour hard stop for you. So I just want to thank you, Crystal, for your very thorough and insightful presentation. The information's being presented, put up in the chat. Maybe folks can put it up one more time, so that folks from my team, so that you can. The people who are on the chat, who are looking at the webinar right now, can understand how to reach out and connect with Bet Tzedek. Just want to thank everyone for joining us today. Thank you for my great team, to Rad and Jake and Jamie, who've been working hard behind the scenes to help pull this together. Let me just also reiterate, we're going to post this online. If you want to share this with friends or family, you're very welcome to. It'll be on our website. We'll post the site right now. And it's just, as always, our offices are open, and our phone lines are open. Reach out to us online or on the phone or in person. We've got an office down in Redondo Beach. The email address you can send queries to for us, senator.allen@senate.ca.gov. We also, our phone number is 310-318-6994. So please, please do reach out to us if there's anything we can do to be helpful with any state related question. And I know the same goes for Crystal. over at Bet Tzedek. So have a really good rest of your day. Once again, 310-318-6994 for us. It's just posted again in the chat if there's any way we can be helpful to you. Thank you so much, Crystal. Really do appreciate your time and
Thank
your
you for having me.
All right, everybody. Good luck with his taxes. Thank you.